Actually, I'm going to jump right in on this one here. And so, did you see this? I showed this on the closing beat.
Yeah, yeah.
So, and this is up to date. So, your lighter color here is 2024. I don't know why it's green, I guess, but so that's now. This is our pullback that we just had. So I'm not including like the little bounce. And then this is 2023. The correlation there,
It's insane.
0.89,
To
right?
see, yeah.
Just year over year. And so I'm not saying that this is going to bounce like it did here. It looks like we're already going to maybe have our early decline here, and who knows what happens. But fascinating to see that even the decline, the top of the market in 2023, almost lines up. We were a week early this year. And like I said, I don't know what it means, but I thought that was super cool. The other part, this drop here and the total decline here, we're missing one day there, but look at this. So if we go to this guy, here's your 2023 decline, just about 9%.
Yeah.
Here's what we had as of the bottom, which was official at the moment, the bottom
They're
of the
calling
market.
the bottom, yeah. Oh, and actually this video is being filmed on Tuesday, so you're seeing it on Friday. So just to give you an idea in this just what we're talking here, because somebody's got to go to DCI, big sponsorship.
Well, so this would have been Monday the 5th, right? So that was the low. Tuesday, little turnaround Tuesday there.
Yeah.
So we even fell the same amount year over year. We just did it a lot faster. So I thought that was super cool. Ultimately, though, still got some gains here year to date. It's like, do you buy this pullback? Are you scared of it? Do you run in? Like, what's your deal?
Yeah, and I think addressing why there was a pullback. First of all, it's interesting because we've continued to see jobs reports come out, and the worse the job report is and the worse news in the economy, people are like buying because it's like this excitement. Yeah. It's like, oh, things are bad. Now the jobs report came out the other day and people are like, oh, shoot, maybe it's really getting real here. Google earnings weren't as good, so they had a pullback. So we've had some companies produce earnings that just weren't as good. But I think the correlation there, even though it was a week different, it does kind of come down to the earnings season. And what we're looking at with the earnings season, that's really when stocks tend to, we really kind of start gauging the economy. How are companies doing out there? What is going on in the economy? The Fed's starting to talk now of, okay, we're probably going to cut rates in September. Well, every time that they talked about that before, it was excitement. But now what's happening is we're starting to see maybe a little bit of a ripple in the economy. So with seeing that ripple in the economy, when the Fed starts to lower rates, oftentimes, and historically, it's always been too late. And so now we've got the question of, all right, is this going to continue back or not? It kind of go back and answer your question. I think that we have the possibility that we're going to bounce around a little, but I think we're going to see quite a bit of volatility between now and October, kind of same as we saw last year.
Yep.
Before we really get, any clarity here. We've got election season. We've got a lot of talk coming up about, all the different things. We haven't had as much this year so far because, there's been all the changes going on. So there hasn't been a lot of talk of, oh, well, this is what I'm going to do versus this is what I'm going to do, tax strategy and all these things. So we're going to see that. We're going to see, the Fed potentially start to cut rates. If they're cutting those rates, is it too late? That's going to be the question. And so I definitely think volatility on this.
That's what the bond market already thinks. So the bond market, and this is probably what caused a little bit of volatility. So here's the Fed funds rate, the top of the range there. And here's what the bond market, the 2-year yield, is actually pricing in. So earlier in the week, I guess now we have to say it that way, the bond market was saying, hey, you're already too late, Fed. Rates should be here, and you guys are still up here. That separation there, that spread, widest on record, by the way, to the downside, that causes everyone to go, wait a minute, now instead of having one rate cut in September, 84% of all people placing bets on the Fed futures now think 2 rate cuts.
Yeah, 50 basis points.
Yeah, they're like, you're too late. And fascinating to watch that.
Was the gentleman, what's the guy? Is it Siegel?
I don't like that guy.
He was on...
Emergency rate cut.
Yeah, emergency rate cut's what he's calling for.
Because of one day's worth of data.
Of down markets. But, we've got to get back used to having some volatility in the market. This is not the panic button right this second. There are going to be times where, the market is going to pull back, but we have to look at averages here. And yes, 22 was a bad year. 23 was an excellent year. 24 has so far been an excellent year. We are going to have volatility. It can't just be a straight up thing. And when we see the straight up thing, what we talked about for forever is like, there's got to be a pullback. We don't know exactly when or where. This just isn't all adding up. Well, so here you go. Here's a little quick reset for us. Take a breather on the market. That's healthy.
Also, it's seasonal. Right?
Yeah.
Like what we just showed a second ago, this first slide with the 2024, 2023, okay, it's cool that it kind of links up. It's a seasonal thing for the markets to do this.
Yeah.
And we'll take it a step further. August and September historically are the worst months for the market. We're looking back 100 years. August in the Dow, 0.80% return. It's only positive 60% of the time. Last 50 years and the last 20 years, we have negative returns. It gets worse in September. September is the worst month for all of it there.
That's interesting to see.
Yeah, so to see an actual pullback already kind of starting is, maybe a little bit early there, but we are in August. And look at September, like the last 50 years, 36% chance of being positive.
Yep.
That's pretty crazy. And this basically, since we're going back 100 years, you could say 60 years were negative, only 40 years were positive, and you had an average loss of, a small pullback. We've already done more than that, but it's a seasonal thing, right? So if we know that we're already going into this and it's an election year, blah, 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 it's like, I kind of see it as an opportunity. Like we've had cash in our funds just sitting there kind of waiting for a pullback. And it's like, hey, is this now an opportunity?
Yeah, I'm waiting for a little bit more volatility here. I mean, we're bouncing today as we're doing the video. And so, market's up roughly 2%. So it's like, okay, let's see where this goes from here. But there's definitely the possible potential opportunity here for some volatility. And we like volatility because that's where you're able to buy in at some dips and find that. So I got a random question for you though.
And then I'll hit you with more data. I got one more piece of data.
All right, well, I want to, okay, you wanted the data first? Because I got something really, really conspiracy theory. We're going a little sideways on this.
Oh, okay. Hold on. Let me just show one more thing then.
All right.
We know we're going into a potential rate cut here in September. So this is every rate cut broken into different categories. And this is 12 months before, and then, of course, 2 years after. What does the market do? Hey, what do you happen to see right around that last quarter before rate cuts in here? Volatility.
Yeah, absolutely.
All the pullbacks, all leading back to sort of the same little area there. And then depending on how we broke it down just based on, this is Goldman Sachs thing actually, what happened afterwards.
But there still seems to be that decline after because again, the Fed generally does not cut rates until there's some sort of economic problem. Oftentimes there's always the catch-22 here because if you're looking at cutting rates, if they cut the rate too early, they know in this position that they're in right this second that inflation was, just running hot and they were trying to drive down inflation. If they cut it too early, we could step back into the 80s when they did the same exact thing in the 1980s. Inflation was coming down. They cut rates too early. Inflation rallied again. And then so that's what they're wanting to make sure they avoid this time because as the average middle American around, we're not going to be able to afford to live if inflation continues to run away. So as much as it stinks to see the Fed kind of pushing this off and you're saying, well, they should have already cut rates potentially. But I personally think that they should have ripped the Band-Aid from the get-go. But hey, who am I? I'm just over here. Just because my uncle is Jerome Powell does not mean that I am Jerome Powell. Just the nephew.
Yeah. You don't get the inside scoop either, do you?
Nope. There's some stuff there. So, all right, so conspiracy here for you.
Oh, yeah.
And I'm curious as to anybody watching if you've been trading on this and trading and trying to jump into your accounts. Fidelity, Schwab, I believe Vanguard, Robinhood, all of them down yesterday in the early morning when the market had this massive pullback. They all just go offline. Nobody has said that as of now. There's not been like a specific this was a certain company that caused. Who's to blame on this situation is kind of not being talked about right now. I'm curious, was this like a higher thing? Like, I don't know, like what you can say here. I mean, it seems like,
it's just it's a question.
Yeah.
It's just a question. Like, was it coincidence or
government?
Was
control?
This used to happen a lot. Like, I'm old enough now, I guess, where during like the financial crisis, we didn't have necessarily the highest speed internet that we do now.
Yeah.
And so when the markets would get really volatile and a lot of order flow would go to the market, you'd actually see skips. And it'd skip for 3 and 5 seconds at a time. And everybody thought, oh, you're messing with us.
But theirs was actually offline.
Just done.
To not being able to trade.
Yep.
And so without being able to trade in this situation, probably for most people it's probably best because they were probably panicking and wanting to sell off. And now we're getting the rebound today. So maybe it worked in your favor. But was there possible hey, we need to limit the downside here? And,
well, there's take the other side of that one. If you're the investor who got a little overdone in the market, and now that decline on Monday would have caused a massive margin call, but you couldn't lock into your account. As long as they didn't go back and say, "Oh, you actually had a margin call," then
Hey,
I'm good with it. But if,
there you go.
if you're locked out and there's trouble,
Yep.
not my bad.
It's not a good place to be there. All right. So what's a pirate's favorite letter?
R.
You would think it's R, but it's actually C. The C. I missed it. The C.
No, it's okay. I knew there was something
I was
there. I've heard
really
that one
excited
before.
as a pirate over here for a minute.
Yeah. Okay.
Yeah. Yeah. About that.
That's good.
You're just like, this is awful. You got me the book. You
No,
got
it's
me
a
this
good-
joke book.
Yeah, yeah. Well, I mean, there's going to be some misses in there. It's okay.
There's a lot of misses. I've been trying to find something decent.
I tell my
tested-
joke now? No? All right.
Adios.
See ya.